Hello and welcome to another episode of Bitcoin Dorks, where we discuss the latest news and trends in the world of cryptocurrency. Today, we'll be talking about the Bitcoin faces headwinds as US money supply drops most since 1950s. In the case of the US, the money supply is controlled by the Federal Reserve, which can increase or decrease the supply through various monetary policies. Now, let's get to the heart of the matter. According to recent data, the US money supply has dropped at a record pace not seen since the 1950s. This is due to a combination of factors, including the withdrawal of pandemic relief funds, decreased government spending, and increased taxation. As a result, the overall economic outlook in the US has become somewhat bearish, with many analysts predicting a slowdown in growth. So, what does this mean for Bitcoin? Well, as you may already know, Bitcoin is often seen as a hedge against traditional financial systems. This is because Bitcoin operates independently of central banks and is not subject to the same inflationary pressures as fiat currencies. As a result, when traditional financial systems are under stress, many investors turn to Bitcoin as a safe haven asset. However, in the case of the recent US money supply drop, the situation is a bit more complicated. On the one hand, the overall economic outlook is somewhat bearish, which could be seen as a positive for Bitcoin. On the other hand, the drop in the money supply could also be seen as a sign of decreased economic activity, which could have a negative impact on Bitcoin prices. So, what should investors do in this situation? Well, as always, the best course of action is to do your own research and make informed decisions based on your own risk tolerance and investment goals. That being said, there are a few things to keep in mind. Firstly, it's important to remember that Bitcoin is still a relatively new asset class, and as such, it can be volatile and unpredictable. This means that even in the face of negative news or economic indicators, Bitcoin prices can still rise or fall unexpectedly. Secondly, it's important to stay up to date on the latest news and trends in the cryptocurrency space. By keeping your finger on the pulse of the market, you can better understand the factors that are driving prices up or down, and adjust your investment strategy accordingly. Finally, it's important to remember that Bitcoin is just one part of a larger investment portfolio. While Bitcoin can be a valuable asset for diversification and risk management, it's important to also consider other asset classes, such as stocks, bonds, and commodities. Another important factor to consider is the overall sentiment of the cryptocurrency market. While Bitcoin is the largest and most well-known cryptocurrency, there are many other digital assets that can have an impact on market sentiment. For example, if a major altcoin like Ethereum or Binance Coin experiences a significant price increase or decrease, this can have a ripple effect on the entire market. It's important to keep an eye on these developments and adjust your investment strategy accordingly. It's also worth noting that the recent drop in the US money supply is not the only factor affecting Bitcoin prices. There are many other geopolitical and economic factors at play, such as inflation, government regulations, and global trade tensions. These factors can be difficult to predict, but it's important to stay informed and understand how they could impact the cryptocurrency market. One potential positive development for Bitcoin is the growing adoption and mainstream acceptance of cryptocurrencies. In recent years, we've seen major corporations like Tesla and MicroStrategy invest billions of dollars into Bitcoin, and more businesses are beginning to accept cryptocurrencies as payment. This growing acceptance could help to drive up demand for Bitcoin and other digital assets, potentially offsetting some of the negative impact of the drop in the US money supply. Another potential positive development for Bitcoin is the growing interest from institutional investors. In recent years, we've seen major financial institutions like Goldman Sachs and Morgan Stanley begin to offer Bitcoin investment products to their clients. This increased institutional interest could help to drive up demand for Bitcoin, potentially offsetting some of the negative impact of the drop in the US money supply. Another important factor to consider when evaluating the potential impact of the drop in the US money supply on Bitcoin is the global economic context. In recent years, we've seen a significant shift in the global economic landscape, with countries like China and Russia increasingly seeking to diversify their reserves away from the US dollar. This trend could potentially benefit Bitcoin, as it is a decentralized asset that operates independently of any particular national currency or financial system. Additionally, the ongoing COVID-19 pandemic has brought renewed attention to the need for decentralized and resilient financial systems. With governments around the world pumping trillions of dollars into their economies to stave off recession, many investors are concerned about the long-term impacts of inflation and currency devaluation. Bitcoin, with its limited supply and decentralized nature, is seen by many as a potential hedge against these risks. In conclusion, the recent drop in the US money supply is a complex issue with potential implications for Bitcoin prices. While it's important to stay informed and keep an eye on market trends, it's also important to maintain a long-term investment strategy and not get caught up in short-term fluctuations. As always, do your own